I do want to bring in Christine Short. She's head of research at Wall Street Horizon, joining us from upstate New York this morning. Christine, it's great to have you on the show. And what can we expect this earnings season?
Yeah, so you pointed out Delta's already reported. We usually think of the earnings season kind of kicking off with the banks, but there's 20 companies that have already reported. And of those, in the S&P 500, of those, 71% have surpassed their bottom line estimate and 81% have surpassed on revenues. And I think that's really important to note because we know revenues have kind of been lagging the last few quarters. Revenue beats have only been around 60%. So I'm happy to see those numbers. But of course, of those 20 names, there are some mixed results. You mentioned Delta, which we talked about last quarter. We came into the year with Delta CEO Ed Bastian saying this is going to be a record year for revenue. Then as we entered the first quarter earnings season, they actually ratcheted down guidance surprisingly in between the two quarters because they just weren't seeing the demand. Well, we saw Q2 results just last week, and the demand is there for summer travel, especially their premium priced products, so business class and premium economy seats, as well as transatlantic flights. So that was a positive note. We've heard great results from Micron already this season. On the downside, some more consumer-related names such as FedEx seeing, the volume of delivery is not as high, and Nike, they're still having issue with inventory and having to go more promotional. But overall, S&P 500 expected to grow about 5% year over year. That's on the bottom line, and about 4.2% on the top line. So pretty decent numbers, the lowest EPS growth rate we've seen in 6 quarters. But you have to keep in mind the difficult year over year comparisons and the fact that we've really ratcheted back over the last few weeks, as analysts often do. We'll expect it to be higher than 5% when all is said and done.
Christine, how do tariffs factor into the results that we're about to get over these next few weeks from major S&P 500 companies?
Yeah, well, at the beginning of the year, we were tracking how many companies were mentioning tariffs in a negative way. And it was the most S&P 500 companies citing tariffs, and probably in the last 10 years or so. I certainly still will be a topic, but I think you see how insensitive the markets are now to tariff news. Right now, futures are just barely off of all-time highs for the S&P 500. So I think traders and investors are always kind of in wait-and-see mode. They're going to wait to see how these earnings reports come out. They're going to be looking at corporate guidance and what company management has to say. But we've seen a lot of these trade policies clear up, and they've become a little more measured. So despite the announcement over the weekend of 30% tariffs, a proposal for 30% tariffs on the EU, on Mexico, also new tariffs proposed for Canada and Brazil, the markets wait and see because they haven't always come to fruition. So while they will be a main topic, I don't think corporations are going to be as nervous of the outcomes of those tariffs for the second quarter.
Interesting. So in terms of themes that we can anticipate throughout this earnings season, Christine, what is shaping up ahead of some of these results?
Yeah, some of the same themes we've been seeing and tracking the last few quarters. So Gen AI certainly going to be in focus. We've noticed even among the Mag 7, those that are more leveraged to Gen AI have done better. And year-to-date returns for names like NVIDIA, Meta, Microsoft are all over 20%. Expectations for those names are very good. But I will say tech overall, the bar is quite lowered. We've seen negative earnings momentum coming into this earnings season, which means that analysts have been ratcheting back those earnings estimates, which worked well for them in Q1. So lowering the bar means there's better of a chance that they will beat. Investors tend to like that the stock pops, so we'll be tracking those names. But the other half of the Mag 7, like Apple, Amazon, Google, those not as highly leveraged to Gen I, not expected to do as well. And we also see that in their stock prices right now, as they're not doing as well as the first half I mentioned. And then, of course, the other thing we're tracking is consumers. The health of the U.S. consumer. We've already heard about it from some of the reports that have come out. They've certainly been cooling. We'll wait to hear from the banks. We're going to be looking at credit quality, credit card delinquencies, net charge-offs, so loans that are just written off because they're deemed uncollectible. Those have been on the rise, nowhere near historically high levels, but certainly some of those things have been moving upwards. So we want to see what banking CEOs have to say about the health of the U.S. consumer.
I think that's a good point, Christine. Of course, net interest income, the money that these banks make on the money that they lend out, is very key here. And we've seen yields be pretty sticky, right, at those elevated levels. What more can you tell us as that relates to some of these big banks that we'll see report throughout the week?
Yeah, net interest income certainly will be a little more muted than we've seen. Credit quality, of course, like I said, another area that we'll be watching with those bank reports. Investment banking starting out a little bit of a comeback here. IPOs that were on the sidelines for most of 2024, like Chime and Circle and Hinge Health, have debuted this year. And, let's look at Circle, up 500% from where it priced. So they're doing a lot better than IPOs have been doing the last couple of years. M&A, not so much. There's been some real mega deals that have been in focus, like Sycamore Partners, proposal to acquire Walgreen Boots Alliance, Google's acquisition of Wiz. So there's been a few names there, but the volume for M&A hasn't been where it's been in the past. On the IPO front, we still have a few waiting, StubHub, Klarna. So conditions aren't necessarily perfect to debut, but we're starting to see a little momentum there. That certainly helps Goldman Sachs and Morgan Stanley, which report on Wednesday. And then the other thing we're looking at is trading, trading and sales activity, which certainly in the last couple of quarters, trading revenue has been very high with volatile markets. Well, the markets were a little calmer this quarter. So equities trading, we're expected to see more of a muted result, but fixed income, commodities, and currencies will probably be more of the shining spot for trading revenues this quarter.
Christine, how important is outlook? We know oftentimes stock prices will respond to outlook that these companies give, but knowing that in many ways uncertainty has been a key word this year, especially as it relates to trade, how could that play out?
Yeah, well, as we know, the results are always backwards looking. They're important, and we do see investors react to beats and misses, but it really is all about the guidance. All of that can be wiped away if the guidance is in one direction or another. And so we certainly look at guidance. As you pointed out, it's hard to give guidance with this uncertainty, but I think we've seen how this administration is playing out in some of the trade policies. So some of the uncertainty there, I think, perhaps is dissipating because we expect to get a resolution, right? There are other macro headwinds that many of these companies will have to face, but corporate resiliency is in play here, and we've seen it by how the numbers have come in. We've seen it by the guidance that we've gotten for this quarter. So we'll be looking for guidance for the second half, but I would expect that there's not as much uncertainty as when we entered this year. Companies have learned how to manage it. They've learned how to manage whatever tariffs they've faced and other macro headwinds like the consumer. And so certainly they will mention it, but we'll be looking at those numbers for the second half of the year and that they're not ratcheted down.
Christine Short, head of research at Wall Street Horizon, joining us from Accord, New York this morning. Christine, thank you.
Thank you so much.
All right, everyone, coming up, Bitcoin at